If you didn't check your app today or the markets today, well, the market crashed. I mean, not crashed. We had a big sell-off, not a huge sell-off, because a huge sell-off would mean like 3.5, 4, 5%. This is really kind of a market crash because this will put us to maybe mid last year, but we end up around maybe 2%, okay, across all the major indexes. In this video, guys, I want to share with you why there is a possibility of AMC short squeezing because of this market crash. So a market crash is never a good news. I mean, if you are not short, okay, but most of the people are buying stocks because they want to put the capital, put the money at work for the short, medium, or long term. That's why we are all in AMC, even though it's a momentum play for the short squeeze, okay? But the thing is, when you have a market crash, emotionally, it's really harsh because it means you see your account going down, going down, going down, and it's not good. You know, it's painful. But actually, guys, in the case we are in a market sell-off, or I mean, if the market sell-off continues and leads to a market crash, this can potentially be a good news for AMC because it will mean a series of cascading events like a domino effect leading to some of the shorts that get into AMC around maybe what, $55, $60 a share, and right now they are potentially looking at, I would say, ultimately, you know, at the best 50% gain on their short positions. In contrary of Citadel, who's been here, you know, around maybe what, $5 or $10 a share. Okay, so those new shorts, which I think are not as big as Citadel, you know, can potentially, or the other edges can potentially be looking at, okay, if the market continues to sell off, you know, my other positions, whether I'm long or short, you know, the market is going against my direction. So if I'm sitting on huge margin, which we know most of these hedge funds, most of the banks, I mean the big whales in Wall Street are sitting on way above average margin, as usually it is the case in the market, especially here in the US. So it means if the market is going against their direction, ultimately they will lose a ton of money, not only on their current positions, but also when it comes to the liquidity requirements from the brokers or the other banks they're working with. Okay, we already know that following our Kigos, Credit Suisse and Nomura, which are the big banks in Europe and in Japan, lost a ton of money. Top executives get fired because of that. So the other banks like JP Morgan, Morgan Stanley, Goldman Sachs, Bank of America, Merrill Lynch were thinking, okay, what do we need to do in order to prevent this from happening to ourselves? Okay, we're gonna rest. You know, we're gonna take some distance with those hedge funds, especially with those meme craziness stock happening in the market. So we're gonna make sure we are kind of taking because we don't want to go down with you guys. So that's one. But second, we already know that we have new rules coming into play, even though they're not as enforced as we want it to be. But definitely, there's a huge potential that, hey, since the market is crashing, your liquidity will be drowning, and your bank which you're working with will say, hey, you need to either raise cash by adding some cash, or you need to sell some positions. And that's how, by either selling positions where they are long, or covering some positions where they are short. And since AMC is part of one of the high shorted stock lists in the market right now, man, it means those new shorts who came in late will be the first ones to be, okay, I don't want to lose any more money on my other stocks. I need to cover now and get out because this thing can pop at any time. So I'm out. And when those little, bitty shorts will be out, that's when it creates a buying pressure. So AMC will maybe move from the low 30 we are currently sitting in into maybe the high 50s, okay, or the low 60s. And that's how it creates another huge pressure for the big ones like Citadel and say, hey, not only I'm losing more money into my long position because the market is crashing, but also I need to raise additional cash to meet my liquidity requirements. So I need to maybe think about reducing my short position in AMC. So it means either covering part of it, 30%, 40%, 60%, 75%, or completely get out because the buying pressure will be so high, especially if you count in FOMO, margin squeeze, option squeeze, etc., etc. Fail to deliver, all of these combined, boom, they have to be out. So maybe maybe that's how we get to, an event, a series of events leading to the short squeeze. But again, guys, it's not because I'm a guy making videos on YouTube that it means it necessarily have to happen because I said so. So, my 2 cents.